Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and global events that shape our economy. We're starting off with a critical story that's been making waves in the energy sector. The Strait of Hormuz, a vital waterway connecting the Gulf to the open ocean, has been at the center of escalating tensions, with about 20 million barrels of oil and petroleum products passing through it every day. This strait is essentially the lifeline of global energy supply. Recent developments have raised concerns that the strait might be closed, either partially or fully, which would have far-reaching consequences for the global economy. We're not just talking about oil prices skyrocketing, we're looking at a potential ripple effect on global trade, shipping, and even food prices. To put this into perspective, if the Strait of Hormuz were to close, it's estimated that about 2/3 of Gulf exports would be cut off from the world almost immediately. This would not only affect oil-producing countries like Saudi Arabia, the UAE, and Iraq, but also have a significant impact on Asian economies like Japan, South Korea, China, and India, which rely heavily on imported liquefied natural gas. The effects wouldn't stop there. Shipping companies are already avoiding the strait, and delays are expected. This could lead to higher freight rates across bulk commodities and container shipping, impacting worldwide logistics. Now, we want to emphasize that these are complex geopolitical issues with many moving parts. While it's essential to acknowledge the risks involved, it's also crucial to recognize that diplomatic efforts are underway to resolve these tensions peacefully. As we continue to monitor this situation, one thing is clear: the world is watching, and the stakes are high. We'll be keeping a close eye on developments in the region and bringing you updates as more information becomes available. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of biotech and pharmaceuticals, where investment opportunities can be both lucrative and risky. Today, we're looking at three companies that have been making waves in the industry: Halozyme Therapeutics, GE Healthcare Technologies, and Sarepta Therapeutics. Let's start with Halozyme Therapeutics, a company that has been gaining attention for its enzyme-based therapies. With a strong pipeline of products and a growing revenue stream, Halozyme is an attractive option for investors looking to get in on the ground floor of a promising biotech company. However, as with any investment, there are risks involved, and it's essential to do your research before making a decision. Next up is GE Healthcare Technologies, a company that has been deleveraging and generating cash, making it an attractive option for investors looking for a more stable bet. With a strong track record of innovation and a diverse portfolio of products, GE Healthcare Technologies is a company that's worth keeping an eye on. However, the biotech industry is highly competitive, and there are always risks involved when investing in any company. Lastly, we have Sarepta Therapeutics, a company that has been making significant strides in the field of genetic medicine. With a strong pipeline of products and a growing revenue stream, Sarepta is an exciting opportunity for investors looking to get in on the cutting edge of biotech innovation. However, as with any investment, there are risks involved, and it's crucial to approach with caution. It's essential to remember that investing in the biotech industry can be high risk, high reward. While these companies may have significant potential, they also come with inherent risks that can impact your investments. As always, we recommend doing your research, diversifying your portfolio, and consulting with a financial advisor before making any investment decisions. Welcome back to the Riskwiser Zone. Today we've been exploring various investment opportunities and analyzing their potential risks and rewards. As we wrap up this episode, let's take a look at three companies that have been making waves in the market: the Gorman-Rupp Company, Comfort Systems USA, Inc., and First Trust Index Innovative Transaction and Process ETF. We started with the Gorman-Rupp Company, a leading manufacturer of pumps and pump systems. The company has seen significant growth in its revenue and earnings, driven by strong demand for its products in the water, wastewater, and construction markets. However, investors should be cautious of potential risks such as supply chain disruptions and increasing competition. Next, we examined Comfort Systems USA, Inc., a provider of mechanical and electrical installation, renovation, maintenance, repair, and replacement services. The company has delivered impressive financial results, with revenue surging to $9.1 billion and operating margin rising to 14.4%. While this growth is certainly promising, investors should monitor potential risks such as fixed price execution risk, labor constraints, and cyclicality in capital spending. Lastly, we touched on First Trust, Index Innovative Transaction and Process (ETF), which tracks the performance of companies involved in innovative transaction and process technologies. This ETF has seen significant growth in recent years, driven by increasing demand for digital payment systems and other innovative technologies. However, investors should be aware of potential risks such as regulatory changes, cybersecurity threats, and intense competition in the fintech industry. As we conclude today's episode, it's essential to remember that every investment carries some level of risk. It's crucial to conduct thorough research, diversify your portfolio, and consult with financial experts before making any investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.